Welcome to my video. I'll trust you'll find it helpful and informative. Please remember to like and subscribe. Thank you.
Welcome, guys. We're looking at sample assignment 3, question 3, the debtors and creditors individual account. And we are specifically going to look at the debtors account because there are a couple more things that can happen in the debtors account. After all, if you're doing the creditors account, you're not going to record your own bankruptcy. But when we are dealing with the debtors account, that's one of the things that can happen. So this is the question. It says, ABC, we're going to stick with our ABC company, uses a periodic inventory system. It's not as important as it was in our journals. They are registered for VAT and trade only with other VAT vendors. And April 2021 is month 4. Okay, so we just know that their year end is December. Okay. And what they always will give you in the beginning is they will give you the list of balances of the debtors ledger. This is really your debtors list of the previous month, the end of the previous month. And your main goal at the end of this month is to come up with another debtors list that will now obviously be different, but will reflect your debtors for the current month. They give you certain transaction codes. And they say, so, okay, if there's going to be a credit sale, you're going to use code 01. If there's any returns, it's going to be 02. If it's going to be, if you grant anybody a settlement discount, it's 04 and so forth. Okay. Now, even though they give you here 12 different codes, you are not going to use all 12 codes. Okay. So, like always happens in these type of questions, is you get more information than what you are going to use. Okay, so then they're going to give you a number of journals. They're giving you the debtors journal of the company for the month of April. Okay, and they give you the debtors allowance journal for the month of April. And they give you the cash book receipts for the month of April. And then, of course, they give you the general journal for the month of April. And what you are looking for in all these journals is something that is relating to debtors and trade receivables and things like that. But please, I have changed all the debtors to debtor 1, 2, 3, 4, and 5. Okay, so every time there was the name of a debtor, and you will find a real name of a debtor in your assignment and your exam. But what I've done is I have just identified those debtors as debtor 1, 2, 3, 4, and 5. And very, very important, I color coded it. Now, if you guys were doing a paper-based exam, I would have said to you guys, make sure that you bring a highlighter so that you can highlight it. Now you don't have that. So when you are doing your online exam, be very careful that you identify all the transactions that relate to a certain debtor. So I had chosen green for debtor 1, and I saw, looking at my previous debtors list, that debtor 1 was on the book, so that's where the green started. And then every time debtor 1 came up, I marked it in green. So there was a sale to debtor 1, there was a return from debtor 1, there was a payment from debtor 1, and then there was a settlement discount that was granted to debtor 1. Now remember, all of this information is given. I'm just going and I am marking everything that relates to this data. And then at the end of the month, we see the following. A check received from debtor 1 was returned by the bank, marked return to drawer on the 30th of April. Okay, so that's bad. It means that we're going to have to write back this settlement discount. We're going to have to write back this payment that was received from him. But that's not where we start. We are just starting by marking everything that relates to debtor 1. We're in green. Then we go to the next one, and that one is, of course, debtor 2, and debtor 2 was blue. And then I said, okay, there was once again a sale to debtor 2. There was a return by debtor 2. There was a payment by debtor 2. There was a balance transferred between us and debtor 2. Now, what this means is that debtor 2 is both one of our debtors and one of our creditors. And when that happens, we can use a principle called set off to take what he owes us and take what we owe him. And if the amounts are the same, we just set off the two amounts against each other. And in the additional information, there is nothing regarding debtor 2 in there. And if we look at debtor 3 was, what do I call that? Like, I don't know, a pink. Let's call it a pink. Shows pink for debtor 3. And once again, debtor 3, well, there was a sale to debtor 3. There was a return from debtor 3. Debtor 3, it seems, didn't make any payments to us during the month that I can see. And if we see here, oh goodness, debtor 3 is the one that went bankrupt. We were writing the entire amount off as irrecoverable, so it's not surprising that he didn't pay us during the month. Anything else regarding debtor 3 in the additional information? No, nothing. And so we go on. Now we look at debtor 4, and debtor 4, I'm going to call that orange because I can't call it pink as well. And then if we go debtor 4, and we look at everything in the debtors journal, yes, there was a sale to debtor 4, a sales return. He brought something back. He made a payment here in the cash book receipts. There was interest that we charged him, and then we reversed that interest, and the reason is that debtor 4 had deposited the amount owing directly into our bank account, and that is why here it only shows on the 30th, and it was discovered on the bank statement. Okay, but it's not like we have to record the transaction. It was recorded. The only thing, they're just telling us what happened. And of course, there will now be different codes involved when we deal with debtor 4. Okay, and then they say to us the following. They say, open, post to, and balance the debtors control account in the general ledger of ABC Pty Limited for April 21. That's the first thing. Draft the debtors ledger of ABC Pty Limited and draft the debtors list. Now, when I did it in Excel, sheet 1 is indeed the balance in the debtors control account, but that's not really where I started. I started on sheet 2, and I did the debtors ledger first and the debtors list second. So let's go and have a look at that now. And because we went through it now, I'm going to make sure that I do not necessarily come back to this now. Just a note here that I also want to share with you guys. Of course, in our cash book receipts, there will be other transactions that does not relate to our debtors, okay? But those we can just ignore. So you'll go through your cash book receipts journal, and you will identify the debtors. Don't worry about the fact that there are other information. There will be other information, but not in your debtors journal and your debtors allowance journal. In your debtors journal and your debtors allowance journal, the details there will always refer to the debtors, and you need to make sure that you've actually marked each of those transactions. Okay. Now, and obviously what you have here from the general journal is also not the entire general journal, but it is everything where we had the account trade receivables reflected. Okay. Because if there's trade receivables, it refers to a debtor, and that is why these were marked. But these are also the only ones they give you, and you do not need to worry about finding anything else. Okay, now let's go and look at the way it is done. So, and the way you do the debtors ledger is you identify one debtor at a time, and that's why you marked it. So for debtor 1, which was marked in green, we know that on the 1st of April, obviously, this guy, there's no code for it. This guy had a balance. Okay, there's no document number there either. There's no folio number there, but there is a balance that was brought down from the previous month, and that balance is 90,922.74 rand. And where did we get this balance? It was on the debtors list of the month that they gave us. So that very thing that we started with, that is where we find that balance. Okay, then what's happening? On the 4th, this guy bought more from us. Okay, it was an invoice that was generated. It is debtors journal 4. After all, it will be on the given information, but I also told you that April is the 4th month, so it's debtor journal 4. And of course, if since creditors control is asset account, we are going to debit his account with the amount of the sale, and the balance will increase accordingly. Then on the 4th, what is happening there? Well, there is this return. Okay, he brings back some of it. So here we have the credit note, and that credit note we are going to find in the debtors allowance journal, and obviously it is going to decrease our asset account. So we are going to credit his account, and once again we put the balance in line with that. Then we get very excited on the 10th of April because there is a nice big payment that he makes. And when he makes that payment, it will obviously be in our cash book receipt journal, and he settles his account. And so we credit his account with not the full amount there, but with the 168, because remember, that's what the amount that is recorded in our cash book receipt, and the rest, the difference between that two, is a discount. So we bring it in line again. So because of that, also on the 10th, we are giving him the discount, and we're still just using the codes that we were given. It's a journal voucher that was made out. It will be in our general journal. And it's also going to be credit because we want his balance after him settling his account to be 0. But then, lo and behold, what do we find out on the 30th? We find out that on the bank statement, we see that that was returned. We are going to put it in the cash book payment register. I guess it will also be cash book payment 4. I didn't put it in there, but you can put it in there. And what are we doing? Well, we have to write back that amount that was recorded in our cash book receipt. That amount was recorded in our cash book receipt. If we write it back, we have to put it in our cash book payments. We bring in the balance. And not only do we have to write back the payment, we also have to write back that discount that we gave him. Okay. Since we did that in our general journal, we are also going to do the write back in our general journal. So we're going to create the journal voucher, and that is for the amount of 14,000. And so his account will go back to the amount it was before we made the payment, which was 183,158. Okay. Now, I guess we now could have charged interest, but we didn't because it came to our attention too late. but in the next month, we clearly are going to charge interest for debtor 1. So that's everything that pertains to debtor 1. Then we go on and we go to debtor 2. So once again, what we expect on the 1st of the month is nothing but a balance. Then during the month, there is the sale. On the 6th, that's going to be debited. Same arguments against the invoice, against debtors journal 4. Then he returns some of the goods to the tune of 40,000. So we make out a credit note and we credit his account. Then there is a payment that we see in the cash book receipt, leaving us with 266. But obviously, he phoned and asked, listen, guys, you owe me money, I owe you money. What's the difference? We said, listen, the difference is 22,225. He came, he paid it. And to bring that balance align with the balance that we have for him as a creditor. And so what happened there in the general journal is we applied the set off to make his account 0. Now, when his account is 0, it means that debtor 2 will not appear on this month's debtors list. Okay, we're going to look at debtor 3. Once again, at the, I don't know what I did there, let me cancel. Once again, there is a balance at the beginning of the month. We know that there is a sale. We know that there is a return. And then, of course, we get that sad information that he has gone bankrupt. So that we put that in our general journal, we create a voucher, and we say this is bad debt that is written off here. And his balance is therefore also 0, and he will also not appear on the next month's debtors list. In the case of debtor 4, yes, we have a balance at the beginning of the month. Then there is a sale during the month. There is once again a sales return the day after that. Then we do not receive a payment from him when he was supposed to pay. So what do? We, okay, I see what I did here. I actually say, listen, we did record. Everything is happening on the 30th. So it doesn't matter if you record the payment first. So we record the payment, by which time we'd already charged him interest. And then we see, oh no, goodness, there was a payment. And so therefore we write back the interest. Okay. But now, please, I think it would possibly be more correct if I did this the other way around. Okay, so first record the interest, then record the payment, and then write back the interest. Because of the formatting in my sheet, I am not going to change it now, but when you do it, I would advise that that is the better way to do it. You've got to fill in. It's a fill-in exam in any case that you're going to do. But remember, in your assignment, it's not filling. You're completing your assignment. So charge the interest first, then discover the payment, and then reverse the interest. Then, of course, we have this thing here that is debtor 5. Now, debtor 5 was not on our list at the end of the previous month. So obviously, this is a new debtor. That invoice that's raised there is the first time that this debtor buys from us. But there's also a return, and so therefore, after the return is subtracted, that is his balance. So what do we expect? What I'm expecting on the new debtors list is that there will only be 2 debtors, and these debtors will be debtor 1, who owes us 183,158, and debtor 5 that owes us to 298,226. And so we go and we compile our new debtors list, now only reflecting the amounts that is the balance that is going to be carried over to the next month. And of course, we add those two, and we see that the amount outstanding is 481,385.41. Okay, now that we've completed the debtors list here, I'm going to have a look at the general ledger of the company. We could have done the general ledger first as well, but I just prefer to do the reconciliation of the debtors and the debtors list first. Okay, so if we now go at the debtors control account, what we expect on the debit side is there would be a balance from the previous month. So that balance that is brought down from the previous month is 505,000. And where did I get that? Well, I get that amount here on the debtors list of the previous month, that it was given 505,126.36. Good. Then what will happen during the month is there will be a number of sales that I will make, and these sales will add up to 1277. And of course, I find that in my debtors journal under trade receivables. Okay, and the trade receivables, the contra accounts for trade receivables is the VAT output and the sales. So therefore, here when I put down the details, it's always the details of the contra account that is required, and so therefore I put sales and VAT. Now remember, there is a principle that says that if you record any transactions in your general journal and you transfer those transactions to your general ledger, then you must record it on the date that it happened. And so therefore we know from our general journal that there were two dates that will influence this debtors control account, and the first, of course, was on the what is that now? The 10th of the month, there was debtor one who made that payment. And once again, the contra accounts were sales and VAT, and so we record that payment there. Okay, let's go and look at the next thing that was happening in our general journal. Also, in our general journal, there was on the 22nd, there was a balance that was transferred. Remember that transfer balance? So the way we record that will be on the 22nd. The contra account there is trade payables. For us, it's trade receivables. In the one books, in the other set of books, it's trade payables. And so we record that amount there. Then we also had some returns. You will remember that. And I just want to see where I recorded that, because it could be that yeah. Okay, so here, all of these will now be on the 30th. So on the 30th, there was something that we recorded, and I just stuck with the general journal now. There was credit losses and VAT. Once again, we find it here. Okay, so there, because I dealt with that one, then that one. Here's the credit losses and the VAT as the counter account of the trade receivables here. It was also credited. So we can go here and we credit that amount. And then since we are now working that way, we say, okay, there was interest received that we had here also. And this was, of course, this transaction here was the interest received. We must record it in our ledger account, even though we wrote it back later. It must still be recorded. Okay. And then, of course, the other thing that is happening on the 30th is we are totaling our journals. And when we total the journals, we see the sales returns. And that will also just be the totaling column that we are going to find in our debtors allowance journal. There it is. Okay, so that's where that amount is coming from. And then there was also the bank that was paid into our bank account from debtor 4. You will remember we discovered at the end of the month that he paid it indirectly, and so therefore we recorded it. And that is the last things that will cause our account to decrease. So don't look at the balance there, not yet, sorry. This is the balancing amount here that we will get by the total and subtracting all of these from the total. Okay, so all of these things were things that decreased our account. Were there other things that increased our account? Well, most certainly there were. The first was the interest received that we had to write back. Remember, we recorded that transaction and then we saw, no, it's not true. And we just wrote it back. So the entry there is still interest received. Here, of course, we have that RD check. And if we have the RD check, that is going to increase our debtors control account again. So we have to record that. It's not the full amount. You can see that's 168. And there it was more, it was 196. And that difference there was, of course, the discount we gave him that we had to write back there. Okay, discount. And that should be all that we have on that side. Then we go and we look like we do with all general ledger accounts. We go and we say what side looks like it is the most, and clearly this is the most. So we go and we total that. Okay, and that is just total. We take that same total that we have on the debit side and we put it on the credit side. And then, of course, we now have to find the balancing amount here. And that balancing amount that we carry down is the difference between the 1971 and all of these. And then that same balance is the balance that we are going to bring over to the previous month. To the next month. So what I always say, just remember, if on the 30th of April, this is the amount that you have in the bank at 1 minute, or the amount on that account at 1 minute to midnight, it's going to be the same at 1 minute past midnight, unless you made a terrible mistake. Okay, and that is then the debtors control account in your general ledger. So quite easy. Just going to recap again. Identify the debtor, color code them if you can. Then you go and look for all the transactions that pertain to this debtor, and you record it here to get to the balance for each debtor. If the guy has a 0 at the end, it's not going to be in the debtors list at the end of the month. So in this case, we only had 2 debtors in the debtors list, and there was an amount here of 481. If we go to our general ledger and we didn't do the individual accounts, but we only look at what is on the journals that is given to us, and we do it, we will also get to 481. So that is how you check. The amount that you get here and the amount that you get here must be the same. And of course, if they are the same, then you know that you didn't make a mistake. It's a nice little question. It's always in assignment 3. It's always in the exam, and it's really marks or nothing, because it's a very, very easy thing to do. You don't have to do any calculations. You are simply transferring information, identify, transfer, and checking. And if you do that, you will get all the marks. I think it's about 30 marks for this question in the exam.
Thank you for watching this video to the end. If you found it valuable, please subscribe and like. Thank you.